Good afternoon. Thank you for joining us. Today is Tuesday, July 12th, and my name is Joe Terril, president of Terril & Company, independent wealth managers headquartered in St. Louis, Missouri, with approximately $660 million of discretionary assets under investment. And I wanted today to give everyone updated thoughts on Brexit and why this is a positive, not a negative, to both the economy, world trade, and ultimately investment markets. And helping me today, as always, is Brian Curtis. And Brian, if you're ready, let's start talking about Brexit. Brexit was reacted to very violently by investment markets with the assumption that this was somehow going to cause Britain's economy to collapse and then perhaps Europe's economy to collapse, and that somehow this whole idea of Britain being willing to leave the European Union was a major calamity to the world economy. If anything, that is the exact opposite of what Brexit really represents. And let me start by saying this. The European Union is a bloated, bureaucratic, sometimes corrupt organization that has managed in the last 8 years since the 2008 world downturn to generate absolutely zero growth in the European Union from a GDP standpoint. They run 10% unemployment, 20% youth unemployment. They haven't cleaned up their terrible banking system yet. And in addition to that, they have negative interest rates. They continue to do what they think is correct, and the results after 8 years show the exact opposite. It's a disaster. And therefore, for Britain to say perhaps we're better off leaving this, by that simple definition right there, it's not an irrational move for Great Britain. With that said, let me expand a little bit upon why it's not a bad move for Britain. And this comes about, I believe, from a political belief that is out there that sort of reminds me of the typical Keynesian economic model of, well, the government is responsible for creating economic activity. The government can stimulate by doing various things, and therefore the strength or weakness of the economy is going to be dependent upon what the government does. And there's nothing farther from the truth about that. Generally, those typical Keynesian economic type moves of artificially creating programs that you think are going to stimulate the economy generally backfires and does nothing of the kind. So I think the real issue here is that most people believe that a big government, central government-orientated planning process with a central committee that's going to make these investment decisions has to be the correct manner and the correct way to manage the European economy. And therefore, the thought that someone would want their independence and wouldn't want to be part of this big, massive, bureaucratic government management of the economy is hard to believe for many people. I read numerous articles in Economist magazine, in the London Financial Times, etc., where people were almost dumbfounded as to why would anyone want to leave this bureaucratic mess when that's the solution for everyone's problems, is to have a big central government planning organization. Well, as I said earlier, 8 years and it's got them absolutely nowhere. If Britain does this correctly, it's going to be a boom not only for Britain, but also the United States and others. Because what Britain really wants is free trade with the United States, Canada, and other North American countries. Those markets are bigger than Europe. In general, the European Union looks at it as, well, we advocate free trade, free movement within borders, etc. But they actually don't. They're very restrictive, and European Commission members, in my opinion, do nothing short of take bribes to make sure certain products qualify for European Union free trade. Other ones that should do not. And therefore, it truly isn't a system of free trade. There are some things about it that are an advantage, but in general, it's a bureaucratic mess that is strangling the economy of Europe with unnecessary duties, taxes, etc. So, with that said, let me point out another statistic that was out this morning, just to give an indication of where Britain is coming from on this issue. Ireland, who is noted for cutting corporate income taxes and trying to make a business-friendly environment, reported 26% growth in their GDP economy year over year. 26% growth in their economy. They're going somewhat the opposite way of the European Union by being very pro-business, cutting corporate taxes, etc. Britain sees that. Britain would like to cut taxes. Britain would like to do away with some of the bureaucratic rules of the European Union. If they can do that, and I believe ultimately they will, it's going to be great for the British economy. It's going to be good for the world economy. Wealth is created by the ingenuity of free people that are able to create goods and services for their fellow citizens that are in demand. It's created by people's entrepreneurial spirits. It's not created by a bureaucracy sitting in Brussels taking money to make crazy rules about what does and doesn't qualify for free trade and basically restricting business operations. So, in some ways, the investment market surprised me how fast they bounced back from the Brexit debacle. We were down a day and a half and then the markets have come back. Today markets are making somewhat new highs. But it does not surprise me that we are at new highs. Granted, we're not that much higher than where we were in the spring of 2014 or in the summer of 2015. But this overall movement that we're seeing now is a positive, not a negative. Let's get away from the planned economy of a giant political planning committee, and let's get back to more freedom, lower taxes, and more encouragement for business. With that said, the one message I have about the investment community is, at the same time investors jumped to the conclusion that interest rates were not going to go higher this year and that interest rates would probably stay down for 2 more years because the economy of Europe was going to be so terrible along with the economy of Great Britain. None of that is true, as I've stated. Therefore, we do believe interest rates will go somewhat higher in the United States this year, which actually will be better for the United States economy. And we think we're close to an end of negative interest rates around the world. There is a lot of thought that is now coming out about how negative actually that has been for countries where they've enacted negative interest rates or even 0% interest rates. It kills people's incentive to lend money. Therefore, it kills people's incentive that they can't borrow the money. It doesn't create business activity. It creates more problems than it solves. So, as we stand here today, we are still, as we've said before, mildly bullish on equity prices. For the moment, there's nowhere around the world for people to go with money other than the United States economy. We're anxious to see what second quarter earnings reports are going to come up with, which will start coming out later this week and will come out for the next 30 to 45 days. We continue to be bullish on most commodity prices. We think oil prices will make a strong recovery to the $60 level by the end of the year. We expect some interest rate increases. We're still very bullish on the major bank stocks, and we are in the camp of trying to buy some of these investments on these geopolitical worries and concerns that really have no basis in facts. We wish we'd have been more aggressive on this latest go around when markets pulled back because of the Brexit worry. We did get a few things bought, but it didn't take long for that to turn around. So we will be back after we see corporate profits for the next 2 to 3, 4 weeks with an update. And in the meantime, we thank you for joining us this afternoon. Thank you for joining us this afternoon. Once again, my name is Joe Terril. I'm president of Terril and Company Independent Wealth Managers, headquartered in St. Louis, Missouri, with an update for our clients and our followers concerning what we think of the world economy, the United States economy, and also investment markets in general. Brian, thank you for your help today.